What's going on, everyone? Welcome back to the channel. Sorry I've been not making videos for a bit, just been working full time the last little bit and just really haven't had any chance to trade much. I was off yesterday and today and I took a couple of trades, so I'll go over those trades with you real quick. I also want to go over a new strategy that I'm working on. So this video, I'm pretty much just going to give a little channel update. I'm going to talk about this new strategy, and I'm going to show you how to be successful using this strategy, but also kind of the benefits and the kind of downfalls of this strategy. And we'll go over the trade today on LCID. So Lucid kind of had a big run in the last couple of days. So I was watching it kind of yesterday, but obviously I was not really trading it yesterday because it just had its big breakout, and I kind of was hesitant. I was looking to short it actually towards 40, but I missed the opportunity. But this morning I did catch the same opportunity, so I was able to short it as it kind of jumped up into $40 there. I kind of shorted it in the 39s, and I was looking for a reversal, and it did come all the way back to 38. So from 39.66 it dropped all the way down to 38, but then it bounced really quick. So I covered those shares kind of knowing that it was probably going to reverse, and I kind of I don't know, this trade wasn't the greatest, but it was a green trade, almost $1 a share, so that's kind of the big thing there. But overall it was definitely not what I was hoping for, because really what I wanted was to short the top, which what I thought would be 40, and then catch the move all the way back down to 35. I caught that top, but then it kind of wicked me out, and before I could even get in at this top, it shot down so much that I hesitated on the second short, and I missed it, and then it was just too choppy after that for me to get in. So it is what it is. That was my trade for today. And it was green on the week, because really it was my only trade this week. But what I want to show you is this strategy, and the idea here is to trade what they call, or what the technical indicator known as, the Keltner channels. So this is what we would refer to as like a channel trading strategy. So I guess you could consider me to be like a channel trader, in the sense that what my new strategy has been, or what I've been kind of looking for, not only for like certain confirmations, but for multiple confirmations, and for kind of using things like the Keltner channel to give you those multiple confirmations. So what I want to show you, and this is kind of these are not great examples because they don't really show you how significant these channels are and why they're so important, right? But just think of it like this. What these channels do, so on this chart here, the top of the yellow bar here and the bottom yellow bar, these are the channel top and the bottom. So ideally what you want to do is you want to be shorting towards the top, and you want to be buying towards the bottom. So if you see a stock that's really strong and you really want to buy it, but you don't want to buy the top, you want to buy a dip, you want to be buying down here, right at the bottom of this kind of dip. But obviously you want to also be using stop losses. You basically, when you're buying the bottom of the channel becomes your stop loss, right? So what I've typically found, and what you'll find probably pretty consistently, and you will have aberrations, right? So there are times obviously when things are extremely strong, right? So on QS up here, right, you can take a look at it and you can see how strong it was right out of the gates, right? And you can see that the channel, the purple line, so in this one it's the purple line, the purple top and the purple bottom, so that's your channel, right? So you can see that almost this entire bull move from the open today was outside of the channel, so it was above the channel. So what this is showing you is that it's really strong, but that it's also kind of overbought. But this is the risk of falling victim to these strategies or these kind of trading mentalities, or like I'm going to be a channel trader, I'm going to be a VWAP trader, I'm going to be having these technical or fundamental and analytical devices that allow you to kind of see the market a certain way. Well, what this does is it allows you to see kind of where the market wants to reverse. But when you have these kind of consistently grinding higher, what happens is that you don't have enough downward momentum to kind of bring this stock back to reality, at least not at this moment, right? That's going to happen way over here when you have this crash, right? But the idea here is that when you have a stock that's extremely strong, you really just want to leave it alone. And you want to wait till you start getting a little bit of resistance, and you want to start to wait till you see a little bit of kind of weakness. So let's say on this stock here, you were completely hesitant to buy it because it was just so strong, right? So you wanted to buy QS. You're like, oh, it's breaking out. QS, it's at 26, 27, 28. And you're like, man, I wish I would have bought it. So you're waiting for your entry. But in this whole move up, you don't see a good entry. So what you would do is you would wait for then this stock to come back down into this channel, right? So you'll see here, as this comes down from the top of the channel, it reverses. And so like obviously if you were shorting, it would have been hindsight 2020 to get in short here, and maybe you're shorting 29, using 30 as a stop, which is a decent idea. But this is why you could have thought the same thing over here at like 27, right? Oh, it hit 27. 27 is going to be the top, so I'm going to short it at 27. And then you got your face ripped off as it moved up to 29, right? So the channel strategy is not perfect, right? It's just the idea of giving you multiple levels of confirmation for you to make decisions when you're looking to, buy or sell stocks. So as you see this crashing down from 29, it comes all the way down to 27.30, and you might be sitting there like, oh man, I don't want to buy this thing. Like, it just broke down. It looked like it was going to hold the VWAP, but then it crashed down with this big red candle, and you're like, man, there's no way I'm going to touch that, right? But if you're looking at the channel, if you look at the Keltner channel, you'll see that this 27.30 price was an aberration. It was completely outside of the channel, and at no other time in this day did this price ever trade at such a big point. Like, it was never that far outside of the channel, except for maybe at this point. But this is when this was in extreme strength, so you can kind of expect that to happen. So what you have here is you have people waiting for this stock to kind of bottom out and give you a good entry, which is what happens when this kind of deviates from the channel, right? It shows you that this is now oversold, and it is right for a long towards the upside, right? So this is the benefit of the Keltner channel, is it shows you kind of areas that are good levels to enter a trade, because they're either extremely overbought, like at 29.10 here as it's hitting the top of the channel, or they're completely underbought or oversold, and when you have it kind of flushing and kind of breaking that channel, giving you that big move to the downside, you can kind of get good confirmation that this is a good buying area. Even though it looks so scary and it's kind of breaking down and breaking to new lows, looking like it might want to reverse, the Keltner channel is showing you that actually this is an aberration, and more than likely the price is going to jump back up. And if it doesn't, well, then you can use something like $27 here as your stop, right? Knowing that if it continues to break down lower than the channel will go lower, and then kind of do the same thing that it did on the open, but to the downside, right? So trading in these channels kind of gives you this idea of where the stock wants to reverse, and then where the stock wants to kind of bottom out, right? Or where it wants to top. So you can see here, after that buy at 27, so you'd buy the 27 here, and then you'd hold it, and maybe you'd sell here as it hits the top of the channel if you're really like just looking to catch that move. But if you're holding it all the way up to 29.74 here, and then you kind of catch that reversal, right? maybe you watch it as it pushes lower and then kind of does the same thing as it did on the open, where it constantly rips down looking like, hey, this might be a good entry, and then it pops up. So you'd have to be quick, right, with that buy, but then it continues to move lower. And this is one of the things about the Keltner channel, is that it's not exact science. It's not one of those things where you want to be following this 24/7. You don't want to buy it every time it hits the top and sell it every time it hits the bottom. But what you want to do is you want to look for opportunities. You want to say, okay, so this is why Lucid is a good example today, because you can look at it today and you could say, okay, yesterday it hit a high of 40, and it looks like today it wanted to sell off. So it looks like it wants to reverse today. So I want to get short, right? I want to short this stock, but I don't know necessarily where I want to get in. I know I want to get in close to 40, but I don't necessarily know where I want to short. And even when I short, I don't necessarily know where I want to cover, right? I want to cover down toward 35, but you don't know if you're going to get that immediate move, right? So you want to kind of trade the channel. And if I would have traded the channel better here when it hit 38 and reversed real quick, I would have had like $1.50 winner. And then if I could have shorted the top again when it hit the top of the channel here, it would have been, you know, a monster trade. But the idea here is just to kind of use it as second kind of confirmation. So I want to short the stock. You get this big rip out of the open. You're like, okay, it looks like it's getting more momentum to the upside. You want to kind of catch the reversal. So generally what I'm looking for is a big candle to rip outside of the channel, outside of this Keltner channel, maybe up to this, you know, $41, and then it reverses. And of course it didn't happen at that point. And throughout the day, basically you didn't have any of those big moves, right? But you can see here, if you're kind of looking to short this thing later on in the day, you could see when it rips outside of the channel here, giving you this big top, that's where you want to be shorting. Outside of the channel, looking like it wants to go up, but you also know that, you know, the VWAP is your kind of stop. If you get in at 337.77, then the VWAP is your stop. But at the same time, you want to kind of just be cautious when you get into these areas, but knowing that they're low risk confirmation areas, right? So that's what this is, right? You want to short as it moves up into the VWAP to catch that move to the downside, right? But you don't necessarily want to be just shorting it anywhere, right? In any one of these pops. You want to be knowing exactly when it's overbought or oversold, and that's when you want to be jumping in. It doesn't necessarily mean it's going to be 100% accurate. It just means it's going to give you a better idea of where you should enter and exit a trade. So that's going to be it for this video. Thanks for watching, guys. I try to keep it short. Sorry if I kind of am erratic a little bit all over the place, but this is a strategy that I'm just learning and I'm just trying to perfect. But I think it's a very profitable strategy if you can kind of just be quick and kind of understanding that these are just guidelines, and if you can kind of use them specifically towards the open when there's lots of volume. You want to be using these indicators definitely when there's more volume, because they will give you a better indication of what is going to happen, right, where the stock wants to go. So you can also tell by the direction of the channel which it wants to go, right? So as you see this starts to go down, you can see the channel wants to go down, right? It's a downward channel, right? Here it's an upward channel. So they can give you kind of directional confirmation as well. Anyway, so that was my trade on Lucid today. Shorted it at 40, covered it in the 38.80s. Would have been a really nice trade if I could have just covered it at 38 and then shorted it again where I wanted to, but wasn't quick enough, and this thing just kind of shit the bed. So that's that. If you want, I'll give you one more example. Actually, yesterday, on DBGI, you get a really good example of, and I had a trade on it yesterday, but it was a really quick trade. It's basically just a confirmation, and the confirmation broke. I tried to buy the bottom of this channel, and the channel broke, so then I was out. But you can see here, every time this dipped down towards the bottom of the channel, it was a buy. So you see these kind of candles where it's showing you this bottoming support towards the bottom of the channel, and that's giving you confirmation that this is a buy, right? Does the same thing here. So it breaks below the VWAP, looking like it's showing weakness, maybe, you know, trapping the bears. All these guys get in short saying, oh, it's breaking the VWAP, it's going to fail, and then it just rips your face off, right? And so this did this consistently, came down and hit the bottom of the channel, and then ripped new highs. And obviously, if you were trading it both ways, then you would have bought in the bottom of this channel here, and you would have sold towards the top, and then shorted this top of 650, right? And you can just see that the channel is telling you the directional bias, and also telling you kind of where the good low risk exits and entries are for your shorts or for your longs. So that's that. That's DBGI from yesterday, and yeah, this is the Keltner channel strategy. Thank you for watching, guys. Have a great day.